If you've been watching the silver market today, then you already know something big just happened. Silver prices suddenly pushed higher, catching a lot of traders off guard, and right now XAGUSD is hovering around that $72 to $73 per ounce range after a sharp and aggressive move upward. But here's the real question. Is this the start of a much bigger rally, or just a temporary bounce before another drop? Because what's happening right now in silver is not random at all. It's being driven by some very powerful forces in the global economy, and if you understand them, you can actually stay ahead of the market instead of reacting late like most people. Just a few days ago, silver was under heavy pressure. Prices dropped fast, panic kicked in, and weak hands started selling. That move shook confidence and made it look like silver might continue falling. But then suddenly, the market flipped. Buyers stepped back in, momentum shifted, and now we're seeing a strong recovery move that has pushed prices back up sharply. This kind of price action tells us one thing very clearly. The market is not weak, it's volatile. And volatility usually means opportunity, but only if you understand what's really going on underneath the surface. Let's break it down in the simplest way possible. The first major driver behind this move is the US dollar. When the dollar gets weaker, metals like silver become cheaper for international buyers, which increases demand. And right now, the dollar has been showing signs of weakness. That weakness is not just random noise. It's tied to expectations that the Federal Reserve may start easing its policies sooner than expected. When investors believe interest rates might come down, the dollar tends to lose strength, and that directly benefits silver. Now think about this from a big money perspective. If you're an institutional investor and you expect lower interest rates ahead, where do you put your money? You move away from assets that depend on high interest returns and start looking at alternative stores of value like precious metals. That's exactly why silver and gold tend to rise when rate cut expectations increase. It's not just retail traders pushing the price, it's larger capital quietly repositioning. At the same time, bond yields have been coming down. This is another key factor that many beginners ignore. When bond yields fall, holding metals becomes more attractive because the opportunity cost decreases. In simple terms, if bonds are paying less, investors are more willing to hold silver, even though it doesn't generate yield. This shift in preference creates upward pressure on prices, and that's exactly what we're seeing right now. But that's not the whole story. There's also a geopolitical angle playing in the background. Recently, global tensions, especially around the Middle East, have been influencing market sentiment. When tensions rise, investors often rush into safe haven assets like gold and silver. But here's the interesting part. When tensions start to ease even slightly, markets don't just go back to normal instantly. Instead, they enter a mixed phase where risk sentiment improves, but safe haven demand doesn't disappear completely. This creates a unique environment where metals can still hold strength while broader markets stabilize. So what we're seeing right now is a combination of all these factors coming together at the same time. A weaker dollar, falling yields, shifting expectations around the Federal Reserve, and ongoing geopolitical uncertainty. This is what creates strong moves like the one we saw today. It's not a single reason. It's a convergence of multiple drivers aligning in the same direction. Now let's talk about market behavior, because this is where things get really interesting. After a sharp drop, followed by a strong recovery, the market usually enters a critical phase. This is where smart money makes decisions. They're not chasing the price, no, they're watching key levels, waiting for confirmation, and building positions carefully. And right now, silver is approaching one of those important zones. On the downside, the area around $69 to $70 has acted as a strong support. That's where buyers previously stepped in and defended the price. On the upside, the $74 to $75 range is a key resistance zone. This is where the market could face selling pressure again if momentum slows down. So essentially, silver is now trading in a battlefield between these levels, and whichever side wins will likely define the next major move. If the price manages to break above that 75 level with strong momentum, then we could see a continuation of the bullish trend. That kind of breakout would signal that buyers are in control and that the recovery is not just temporary. In that case, the market could start targeting higher levels as confidence builds. But there's also another scenario you need to consider. If silver fails to break above resistance and starts losing momentum, we could see a pullback. That doesn't necessarily mean a full trend reversal, but it could lead to short-term consolidation or even a retest of lower support levels. And this is exactly why the current phase is so important, because the next move is likely to be decisive. What makes this situation even more interesting is the psychology of traders right now. After a sharp drop, many traders become cautious. They don't trust the bounce and they hesitate to re-enter the market. At the same time, others see the recovery and jump in quickly, afraid of missing out. This mix of fear and greed creates volatility, and that volatility is what we're seeing in today's price action. From a smart money perspective, this is the phase where accumulation often happens quietly, not all at once, not aggressively, but gradually. Institutions don't chase prices like retail traders do. They build positions over time, especially when the market is uncertain. So if the broader conditions remain supportive, this current move could actually be the early stage of a larger trend developing. Looking ahead into the next 24 to 48 hours, the market will likely react to any new signals related to the Federal Reserve and economic data. Even small changes in expectations can have a big impact on silver. If the dollar continues to weaken and yields stay low, that would support further upside. But if we see a sudden shift, like stronger economic data or hawkish signals from the Fed, the market could quickly reverse. This is why timing and context are everything. The silver market right now is not just moving on technical levels, it's reacting to a complex mix of macroeconomic factors. And that means traders need to stay alert, flexible, and aware of the bigger picture. At this point, silver is standing at a crossroads. The recent move upward has shown strength, but it hasn't confirmed a full trend yet. The next breakout or rejection will likely decide the direction, and this is exactly the kind of moment where the biggest opportunities are created, but only for those who understand what's happening behind the scenes. So whether you're a trader or just someone watching the markets, this is not the time to ignore silver. This is the time to pay attention, to watch how price reacts at key levels, and to understand the forces driving the market. Because moves like this don't happen in isolation. They're part of a bigger story that's still unfolding right now.